Alrighty, so let's take a look at another LC-1 example, which is a phase C trade. So for our chart, we can see that we have started to form a bullish swing trend with two breaks of structure to the upside. Not really too much else to say from that in terms of a structural perspective. And we are currently in the 4-hour swing pullback phase, right? After the boss starting to sell off with some decent momentum. Now, price has come into a level of 4-hour demand. It's a decent level of 4-hour demand. It caused a previous break of structure. So there is actually a decent probability, right, that price could continue the bullish swing trend from here. However, we do have cause for lower prices with some more well-priced, levels of demand within the swing range. That's something you have to bear in mind, okay? Now, when we jump down to the M15 time frame, this has been the medium time frame that I'm using in order to shape my directional bias for the session and to pick the POIs in which I'm going to trade that directional bias. The swing trend on here is also bullish because this was where the last swing pullback was that then led to, it's actually like this, it's a bit of a weird one, that then leads to this movement here. Now, this wasn't a sizable pullback relative to recent price action, so these are just internal pullbacks, okay? And then we have that convincing IBOS, and then we literally almost just sell off in a straight line. Now, yes, if we go back to the 4-hour chart, this is a bit of a trickier example. This is where we come into demand. Like I keep saying, we could expect that movement to the upside. We do have to be aware of that. The M15 swing is also still bullish, so there's every possibility we could be heading here to the upside. But with the strong momentum to the downside, almost impulsive, we're only kind of putting back quite correctively so far, right? We don't have like a bullish IBOS to the upside to confirm that this swing pullback is over. There's all of these kind of relatively equal lows to target with sell side liquidity. And if we get that deeper 4-hour pullback, okay, this is the 4-hour swing low, right? Again, there's a lot of cause for lower prices before potentially continuing that movement. So this is one of those scenarios in which you can have a little bit of a, conflicting directional bias. But this is where, and this, if you look back on our markups and analysis in the live market in the Discord, we were looking for quick shorts because with the current structure that we have to work with the immediate price action, we were looking for another continuation of that move with just how impulsive this is and with all of this liquidity here to target, okay? So it's not the most high probable scenario in the world because you have that conflicting directional bias, but hopefully you can see as to how we can build the picture a little bit when we don't have, if you always want to wait when everything is perfectly aligned, then you can be waiting for a long time. There's nothing wrong with that, but that's not personally how, I want to be trading personally, okay? So nice impulsive move to the downside. This is then our weak internal low. The other thing that's nice about this is the sort of corrective pullback so far, right? Just stacking these corrective lows where we know there'll be a lot of liquidity, typically for price to target, right? How does price usually move? Impulse, correction, impulse. And that's how it's starting to shape up. Now, this is just before Frankfurt Open, about an hour or so before. So let's just kind of play price action forward from here. Now, this is a little bit subtle, but we do actually have a bearish M15 change of character here. Okay, it's not the most of obvious ones in the world, but if we're mechanical, what does that mean? It means we have an M15 fractal high that broke an M15 fractal low, therefore it meets our minimum criteria as a strong high. So now we're potentially having this M15 strong liquidation into our POI mitigation. Now, if you were to drop down to the M5, technically this would be an M5 LC2A entry, right? Because it's also, that immediate price action in the pullback to the POI. We have that fake break liquidation here, and that technically would be an LC2A entry. The reason why it's not valid for me is because this is an hour before my session opens, so it doesn't have that session timing, okay? So we pull back into this M15 POI. Potentially we're having this M15 strong liquidation. Let's see what happens next. Okay, perfect, right? If you're not really too sure, about your directional bias or whether we're about to push up or whatever, and we start seeing supply fail, then okay, we'll probably start thinking about longs. But the fact that we pulled into here, it's a bit small to see, but we have had that M15 strong liquidation. Nice V-shaped reaction, right? 3 strong bearish candle closes. That's then given us another bearish M15 change of character, a bit more of a convincing one than the one we were just looking at as well. Okay, so now it's go time for us to look for potential shorts from this level, right? We've had a nice convincing pullback into here. So technically, even this short would be phase C because it's pro-internal counter swing. But what's even better about this is we have that immediate fractal order flow now shift in our favor. Right, so like we're trying to time the pullback here, we've now got the immediate fractal price action on our side as well, confirming this level. So now shorts are phase C and pro the fractal structure. A lot of things aligning for us now coming into session timing. Yes, there's a little bit of demand here, but these are all these corrective lows, right? Now the pullback is likely over into our POI, strong liquidation, V-shaped reaction. If we can get a short from within here, this is very much where you can then target that week low, or you don't even have to do that. You can look just for your quick fixed R target and try and get in and out even before here, potentially depending on how that lines up. Okay, so that's the trade idea. Let's well wait for our POI mitigation. So price starts to pull back a little bit and it pushes down, okay? And now we start to pull back up. So I'm going to obviously jump down a little bit just so we can do that in slow time and lower time frame to see what forms. Now, a common mistake, and I totally get why, is say, at this point where we get the initial M15 shock and prices here, at this point, we do have a valid level of supply. Now, as price is pulling back up, obviously we can look for the fake break to occur in the pullback where we want to look for a high that breaks a low, and then we look for the liquidation of that high, right? And then we enter. Now, it looks like that was starting to form here, right? We're starting to get price action in the pullback, and then this high does what? It leads to a break of a low. So then the question is, okay, if price pulls back up, is that then our fake break liquidation for an LC2A? The reason why it isn't, and the reason why we don't classify it as that, is because when this continues to move, if you look back at the M15, this is going to help you to keep it mechanical. This is now all part of the M15 leg, right? Initially, it would have been a pullback, right? If I bring it back a candle, if price action was here, right, and on a lower time frame it pulled back, and it gave the fake break, and that high breaking that low doesn't come all the way down here, right? It just breaks in and then it comes up and then we get the liquidation, that little cross being the liquidation. That would be valid LC2A. Why? Because this is all that medium time frame pullback. Okay. And that was starting to set up. But then the key thing is that pullback then breaks the M15 low. So now this for me is kind of a mechanical way in which you can say, okay, this is all part of the M15 leg to the downside. So what this is actually now is this becomes lid. This is M15 lid. It's leg inducement. This is part of the M15 leg. So if you are looking or trying to define what now would be the LC2A, it would need to form in this pullback here. So this is now our M15 lid, and of course it's lower time frame lid as well. So I just want to go over kind of the classification of that in case some of you are confused. So now what we get is we get our POI mitigation. Okay, of course you can look for the LC2A, but you need to look from where the pullback starts. And here, there's clearly no high has broken a low within this red circle within the pullback. So if you want to trade this here, what's your option? You can use the lid to the left, okay? And this is how you would set this up. So I think you all understand what the entry model pretty much looks like by now. I think that should be clear. The real purpose of all of these examples is, again, to really drill into your mind when you should be thinking about this entry model. So I'll come back to this in a minute and let's talk about the M15 a little bit again. All right? Strong momentum. We've come into our POI. Nice corrective lows to target. Strong liquidation into here. The fractal structure is now on our side. We've got medium time frame lid, but look at the range we're playing. Because yes, technically, this is kind of that's the last IBOS there. I mean, arguably you could call that an internal pullback. But, either way, that's kind of the larger phase C range we're playing within. But within that, what do we then have? We have a confirmation of the level, and now really we're playing this range. It's this tight little range because if this supply fails, then really we're probably going a lot higher, right? This is already mitigated. This zone here, really if this fails, probably trade idea kind of over. So this is kind of when I see this, I know that this is the POI, which I'm happy, very, very happy to take a loss in because this is the one that's going to go if my trade idea is right. So this is what we're talking about, being super, super aggressive, very, very tight, immediate little range to work with, only one POI to look at, medium time frame lid. This is like when you can consider taking a risk entry. Right? This is literally where you don't even have to wait for an entry order if you want to have this in your plan, and you can take a risk entry like that. Okay, and that's why we take it. And again, coming back to here, higher probable to medium, higher end of medium scenarios, tight, small range, okay? Or a scenario when you consider taking a risk entry. This is when we want to be doing it. Perfect example, okay? So that's how you would size a trade up. Now, what isn't ideal is that the target would be just past the low, but, more often than not, you're going to probably hit your target just past there and then you're out, okay? So very, very clean trade. Yeah, I think the entry model hopefully makes sense. That was a nice example to cover the difference between when it's LC2A and when it's LC1, and kind of the mechanical way you can define that is if when we start to get that pullback, when that high finally breaks structure, if it breaks the medium time frame low as well, then that's just a continuation of the M15 leg. That is all now lid, and you want to see the pullback form the fake break if you're looking for LC2A, okay? So we can still use this. This is still a valid strong liquidation because it's a high that broke a low. We can now trade it now that we have this additional entry model, but we just classify it as lid, Okay, so if you're going to do it, you still want to do it in these scenarios where you have very tight range. There's nowhere else for price to go. This is the POI we just want to get involved with, and this is your aggressive way of getting involved.